It is wonderful to have you all with us today. And for those joining us for the first time, Global Chamber is a growing international business community, and it's designed to support companies in developing cross-border relationships, entering new markets, and growing globally. It's truly an international platform. And here in London, we are continuing to build a strong, active chapter with increasing momentum. In recent weeks, we hosted a private roundtable here in London, and we brought together senior leaders for a really thoughtful discussion on cross-border business, investment, and international collaborations. What stood out very clearly from that conversation was that London continues to play an important role as a bridge city, connecting capital, ideas, innovation, and international markets. And that is very much the spirit in which our London chapter is growing into. I want to just address the geopolitical situation, as many of you know. The current situation in the Middle East continues to evolve, and of course, it creates uncertainty around travel and even logistics. But one message I want to give very clearly today in this, while there may at times be uncertainty around travel, there is not uncertainty around business appetite. The conversations are continuing, the partnerships are continuing, and the commercial interest remains very much alive. So when plans shift, we postpone, we don't cancel. And that is very much the mindset that we are seeing across the region. So I'm going to leave that there. And it brings me perfectly, actually, to today's session. We're delighted to welcome Guy, Raymond, and Darren Akers from Convera. Convera is a global leader in cross-border payments and foreign exchange, helping businesses navigate international markets with greater confidence, efficiency, and visibility. Today's topic could not be more timely. Their presentation looks at the current FX and macro environment, the impact of geopolitical escalations, and what all of this means for business trading across the UK, GCC, and global markets. So, without further ado, Guy, over to you.
Thank you, Zainab. Hi, good morning, good afternoon, everybody. Fantastic to be here, and thank you for the opportunity. Darren and I work closely together, helping people manage everything to do with international trade. Thank you for the kind introduction. Maybe I can reciprocate. We have been members of Global Chamber now, so I think for about a year and a half. And I'm a member of quite a few associations. I work in the partnerships team in Convera. And if you don't already know, and I see some familiar faces, so I think you will do. But this is such a great organization for making introductions and opening up conversations and finding out about what makes companies tick and how they trade globally. So Zainab, thank you. Doug, thank you very much. It's been a beautiful, beautiful relationship, and really looking forward to continuing that through 2026. I work in partnerships. Darren works in sales. I'm gonna show you a presentation from our lead strategist in the UK on market insights, because what we're trying to give you is an overview of what's happening in the market. It's not about us selling our services. It's going to be a 10-minute presentation. I've cut it down, so I'm hoping you'll find it at a decent level. And then afterwards, we're going to take questions from you if you have any. And a word of warning, if it's a difficult question to do with macroeconomics, then I'm going to pass it over to Darren. But if anything we can't answer, I will take away and we'll get back to you on. So on that note, I'm going to share my screen with you all. This is a presentation. It's an internal presentation that was given to us on Monday, so it's the most up-to-date piece we have. I'd rather do that than something that was formalized 2 weeks ago because things have been changing so quickly. And this is by a gentleman called George Vesey. And Zainab, you're on my screen, so when I start playing this, if you can give me a thumbs up because you can hear us and see us okay, then that would be grateful.
All right. We can see it.
Good morning, all. Welcome back to the Market Insights briefing. Obviously, the main point of focus today is going to be the escalating conflict in the Middle East. Over the past week or so, we've seen a big increase in the cross-border strikes, drone activity, retaliatory attacks involving dozens of countries now, including the UAE being hit. Hence, the likes of Dubai, Abu Dhabi, no longer viewed as the havens in this uncertain world. Major air corridors have been disrupted. Shipping routes are obviously under a lot of pressure, and that's feeding straight into supply chain stress, of course. Energy markets are where the turbulence is most visible, and that's been the primary transmission channel into a broader stress in financial markets, and that will be the main focus of today's call. But overall, of course, this remains a fast-moving and highly uncertain situation. Obviously, the humanitarian impact continues to worsen as the days go on as well. But obviously, for the purposes of this morning's call, we'll concentrate on the macro and the market implications as usual, how global trade, energy, risk sentiment, and FX flows are reacting to all of this, and the scenarios worth considering from here. As a side note, obviously, geopolitical risks or risk was a major theme that we highlighted in our Are You Ready for 2026 report, and unfortunately this risk has now materialized even more so over the last couple of weeks. If you look on the first chart here, the Global Geopolitical Risk Index, the current Middle East crisis has triggered a surge in the index. In fact, the spike that we've seen is larger than what we saw at the onset of Russia's invasion of Ukraine and even the Iraq war, which really gives you a sense of the scale of uncertainty that markets are now having to price in. One of the big talking points, of course, is the Strait of Hormuz. It's the single most critical choke point in the global energy system. Around 20% of the world's oil and a roughly quarter of global gas shipments pass through this narrow stretch of water between.
Guy, we lost the sound.
Uh, can you, sorry, Zainab, can you hear me?
I can hear you. Yeah, we just lost the sound of the presentation.
Yeah, I was worried that you couldn't see the decks. Could you see the actual pages or do you see the front
Yeah.
page?
No, we
You
can
could,
see the text, but the
you can
audio
see the deck.
stopped.
Okay,
I
let
could
me.
I could only see the front page.
Yeah, I thought you could only see the front page, so I'm trying to correct that. So here I'm going to go, and hopefully you can all see that page now.
Just see the front page.
Okay, so just give me 2 secs.
No worries.
Hmm.
Can you see the graph on that page?
Yeah, the page hasn't changed. I think this is the first page, and we can see it perfectly fine.
Okay, let me continue with the verbiage then. Okay.
Are you able to change the slide deck while manually?
Guy, can you hear us?
Sorry, I'm having trouble actually sharing the slides. I think what it might be best to do is to listen to the verbiage and I'll show you the slides afterwards. Is that okay?
Yeah, I mean, you can always share them afterwards as well with us, and we can share them with all the attendees. So yeah, certainly, if that works better.
Yeah, sorry, I don't know why that's not showing you the actual slides, but rather than messing around too much, I think I'll just let you listen to the verbiage for now, then I'll share it afterwards.
Okay. Just let me know when you play that so that I can give you thumbs up that we can hear it.
Okay. Sorry, Zainab.
No, don't worry, these things happen. It's tech at the end of the day. It's got a brain of its own
Yeah.
sometimes. We can see a different page now. Weekly
Okay.
review.
Okay.
Yeah.
Abroad
So
for 2026 report, and unfortunately this risk has now materialized even more so over the last couple of weeks. If you look on the first chart here, the global geopolitical risk index, the current Middle East crisis has triggered a surge in the index. In fact, the spike that we've seen is larger than what we saw at the onset of Russia's invasion of Ukraine, and even the Iraq war, which really gives you a sense of the scale of uncertainty that markets are now having to price in. One of the big talking points, of course, is the Strait of Hormuz. It's the single most critical choke point in the global energy system. Around 20% of the world's oil and a roughly quarter of global gas shipments pass through this narrow stretch of water between Iran and Oman. As you can see on this chart here, the shipping traffic through that strait has come to an almost complete halt. And it's a mix of the physical risk here, financial risk, and the operational disruption all hitting at once, which has meant that the traffic through this strait is, as I said, nearly ground to a complete halt. And also, if we look at shipping routes in China from Asia as well, the spot price, as we see on the next chart, the spot price to transport crude tankers has surged to a record high. And if we look at the forward rates for shipping, they've jumped as well. But further out, which is interesting, around 3 months' time, the price has actually softened. So in simple terms, traders are pricing in disruption right now, but perhaps don't expect it to persist through the summer. Sorry, guys, you just make sure you're muted. Yeah, obviously, this is still a massive supply crunch that we're seeing for energy markets. And last week was incredible, really. Oil jumped 37%, its biggest weekly surge on record, which is crazy. And we've seen the daily price swings sitting in the top 5% of historical moves, as you can see on the next chart. And even today, we've seen prices jump another 15%. As we expected, the dollar has re-emerged as the safest FX play here, and it's a big part of the fact that the US is less exposed to Middle Eastern supply disruptions because of its domestic production and export capacity for energy. So the terms of trade shock that hits the likes of Europe and Asia simply doesn't hit the US in the same kind of way. And we'll discuss this in more detail in the FX section. But it's worth pointing out as well that the US isn't completely insulated here. As you see on the next chart, US gasoline prices posted their biggest jump since 2022. So, while the US benefits from its domestic energy position, consumers in the US will still feel this shock when global supply routes are disrupted, like we're seeing. Potentially the bigger risk, though, especially for Europe, is the gas prices. And you'll see on the next chart that prices are still well below the extremes that we saw in 2022, but the pace of the rise that we've seen so far is really telling. And this is where the UK comes into it as well. Wholesale gas prices in the UK more than doubled, as you can see on this chart here as well. It staged the sharpest 2-day rise on record. Again, prices in the UK are still well below the extremes that we saw back in 2022, but the speed of the move is really what's telling. And you combine this with the storage levels that sit well below what they were at the start of the Ukraine war, and it really exposes a clear vulnerability. As you can see on this next chart, gas storage levels are really low across Europe and the UK. And this matters because they determine how much buffer Europe and the UK have when supply is disrupted, like we're seeing. When storage is high, the system can absorb these kind of short-term shocks without prices spiraling. But when storage sits below seasonal norms, as it does at the moment, this kind of disruption forces markets to reprice risk way more aggressively. As you can see on this chart here, UK gas storage levels, for example, are sitting well below their seasonal average. So again, to repeat, lower storage means less resilience, less time to react, and a much faster pass-through rate into prices. Obviously, again, to repeat, this remains a fast-moving environment. We don't know how long the war is going to last. But from a macro market perspective, this is the key question. Is it going to end within a few days, or is it going to be a prolonged regional conflict that has global consequences? You know, a short, contained escalation would likely see this energy shock that we have right now have a limited impact on global economic growth, but a drawn-out conflict risks an historic energy shock, a deeper market correction, and a far more complex environment for the economic landscape. In this kind of prolonged conflict scenario, obviously a combination of higher energy costs, disrupted supply chains, and just a general confidence shock would constitute a meaningful drag on global trade volumes. And again, this comes at a really bad time, of course, when the world economy was still digesting the inflationary and growth consequences of Trump's fresh tariff regime. And at the same time, if this conflict does drag on, uncertainty is, of course, going to weigh on business investment, consumer confidence, and therefore the global economic growth outlook, of course, is going to darken as well. It also complicates the job for policymakers at central banks. You know, although we haven't seen inflation expectations jump that much, they remain relatively anchored, as you can see on this next chart. Expectations for central banks to continue cutting interest rates, you know, we were in an easing cycle, have been dramatically scaled back. Markets are now pricing a slower path of cuts from what they were at the start of this year, as we can see on this next chart here, particularly Fed and Bank of England rate cut expectations have been scaled back, and the possibility of rate hikes by the ECB of now being priced in again by markets. So to repeat, if the conflict ends in a few days, which isn't looking likely, but if it does, then this whole macro story is just noise. The energy shock is temporary, and we'll just return to the existing agenda of you know, navigating the tariff shock and growth differentials and AI uncertainty, which is what we were talking about in the weeks before this Middle East conflict erupted. But if we see a prolonged conflict, it is mainly about this energy price shock, elevated uncertainty, of course, and the impossible dilemma for central banks. Now, what does this mean for FX markets? Well, it really looks like a tale of the haves and have-nots when it comes to energy independence. Again, to repeat, the dollar looks like the best currency to take advantage of this. But other big natural gas or oil exporters like Canada, Norway, they are seeing their currencies more resilient as well, as you can see on this chart here. In contrast, a lot of Asia and Europe are on the wrong side of this. The fact that investors went into this crisis as well with large overweight positions in Europe and emerging markets, in currencies and in equities in that case, both currency blocks look susceptible to further unwinding if we see energy prices stay elevated. Excuse me. We've already seen emerging market volatility surge way higher than that of developed market peers, and that's the first time we've seen it higher than compared to May last year, as you can see on this chart here. So we're seeing a massive sell-off in emerging market currencies, which makes sense given the risk aversion and the stagflationary environment that we have at the moment. And it really upends the optimistic playbook that many forecasts had going into this year. Also, of course, the oil channel. I mean, forecasters were bearish on the oil outlook this year, so that playbook has been ripped up as well. But anyway, keeping it simple on the FX front and focusing on the dollar, the euro, and the pound as usual. The US.
We've lost the presentation, Guy.
Yeah, this time on purpose, Zainab.
Oh, okay. Good.
Yes, sorry about so, yeah. Let me get rid of that. That on purpose because it starts to go into currency pairs, and I will send out everybody who wants it the presentation on that. But that just gives a highlight of how the war is affecting the markets, and it goes on for another 10 minutes. But it can get a bit dry listening to that for longer than we need to. So I thought I would stop it there. And sorry for the technical mess at the front of it. I had planned that to go really smoothly, but hopefully you got the good gist of it as we got back on track.
It's absolutely fine. You made it look smooth, don't worry.
Oh
So
yeah. So I'd welcome any questions. Myself and Darren aren't experts in macroeconomics, but we do know how it affects, currency volatility affects some businesses. So if you've got any questions now or afterwards, please let us know.
yeah, brilliant. Oh, well, thank you, Guy. I mean, that was incredibly timely and very insightful. What I found especially interesting was the way you framed geopolitics, not simply as a news story, but as a macroeconomic driver that is, in fact, reshaping energy markets, currency behavior, and business decision making. And I can actually agree to a lot of that content because that those are the trends that I'm seeing geopolitically as well. And so I actually have a question. So from a UK GCC perspective, are you seeing that this is a moment of pause or more of a moment of recalibration in how businesses manage risk?
I think the way that when it comes to currency, the way the businesses have been managing risk, over the last year or so has been very different, even before now, and now especially in that, a couple of years ago, 30% of businesses might be hedging their foreign exchange exposure because volatility was sort of average. Now it's at least 70%. So if you've got a foreign exchange exposure, if you're managing a currency asset, or you're having to buy services or goods from a business abroad, you should be protecting that purchase and your profit margins with basic hedging products. And if you're not, you're just putting your profit margins at risk. So this is obviously magnifying that. So yes, people more and more are when they're speaking to any provider about foreign exchange, they're asking about how do they protect those margins, and now even more than ever because the markets are very volatile.
Thank you, Guy. Nikhil, you've got a question there. Got a hand up?
Thank you for the presentation. I remember meeting you around 2 months ago, Mr. Guy. We actually
Yes.
spoke about Convera. I already had a need for a solution, a Forex solution. My question is not with reference to the topic. I'm more interested in Convera. So the question to you and Mr. Darren is, I have two firms right away which are looking for good FX, rather foreign exchange solutions. The thing is, we already spoke about my London law firm, the £5 million one. They already are having the likes of Revolut as an account, and they offer quite cheap and better rates. And I think you mentioned that you would probably not be able to compete with. I mean, Convera would not be able to compete with a Revolut and those kind of solutions. But yes, coming to my other firm, a $70 billion global manufacturer, which has around 2,500 people working in US, Middle East, and parts of Asia. Of course, there are people in Europe as well. So we have an issue with regards to obviously, the foreign exchange payments not being very favorable, because when you work mostly on a LC basis, on a letter of credit basis, or you need to keep the banks as a guarantee in the loop. So my question is, can Convera by any chance get involved with LC transactions? But yes, that involves a lot of complications, because I'm not just looking at the cost benefit. Obviously, I'm looking at safety, because we work with importers across the world, right from Australia, New Zealand to US to, of course, Europe and Middle East.
Okay. Thank you, Nikhil.
I think if I understand it, sorry, Nikhil. Thanks for that. I mean, it's two parts to that. I mean, I could answer the Revolut one as well if you wanted. But I mean, in terms of the LLC, I mean, I think where we're different to, we're a disruptor to the banks, but essentially we deal with many organisations. I don't know if you're familiar with the term employer of record. So employer of record is where they've got hundreds of entities around the world, and it saves a company opening an entity in that country. But what we find is with a lot of these EORs, they open up entities in the US as well. But we've got to see that anything. You're right. It's very complex, especially when you got to the different states right across the US. But we've got teams that actually can unpick that, if that makes sense, and offer solutions on the best way to move money around or outside of the US. If that
Is
answers
Nikhil, are you talking about letters of credit, or is he talking about setting up LLCs?
I'm talking about letter of credit transactions, because we export all across the world. We deal with importers. Some of them are new,
Yeah.
some of them are old. It's with the new companies where we have an issue. I mean, we need to make sure that our payments are going to be safe. Our transactions are going to be safe.
Yeah, no, I know how. Yeah, just to follow on from what you were saying, Darren. I mean, the letters of credit piece is something that the banks will only do. We will offer a different product, it's like a trade finance product, which just means that you pay for it a bit later. But in terms of the guarantees you get with a letter of credit, it's only the bank that can issue the letter of credit. A non-bank can't do that. We still can get involved in the payment if you want us to. And why would you do that? Well, you might get a better price than the bank is offering you, for example. But if the banks stipulate that you have to use them to make the payment, if they're going to give you the letter of credit, which I think sometimes they do, then you would have to do that through the bank.
Sounds great. And
my suggestion, hey
any...
guys,
Yep.
great conversation. I think it goes to the depth and knowledge and expertise of Convera. This sounds like a private conversation that you three need to have separately. We need to keep moving on. What do you think, Zainab? Because we have people in the room and yeah, I know you wanted to do a little bit of a roundtable as well.
Look, I think this is a very healthy conversation, because we are able to answer some of those questions, and that's absolutely fine. I think if a question needs more depth, then certainly we can have that answered after this meeting, and then you guys connect with each other.
I agree.
So to continue on, really, and do let me know if you all have any questions. But I'm very interested in understanding for UK companies, Guy and Darren, importing for the UK companies who are importing energy intensive goods or trading globally from London. What are the FX mistakes they risk making in this environment?
Well, I um, just to put it simplistically, I would say they need to be speaking to someone about a hedging structure, because with the price of energy as it is changing constantly and kind of in for serious upheavals, whichever way the US operates or things happen geopolitically, I think you need to be speaking to someone about hedging some of your exposure. And maybe not all of it. So let's say you've got £1 million a year to spend on gas. We would suggest you talk about hedging 70% of it and then buying in the spot market 30%. Otherwise, as you're going to risk really depreciating into your profits. So any global payments business that you operate with should be able to give you good hedging advice. Sometimes the banks will only give it to you if you're a certain size, which is why you might use a provider like us or someone else. But I'd be pushing to have those conversations so you've got a strategy in place rather than just going with the flow.
Thank you. And you mentioned the EOR. I'm not sure. So are we all familiar with EOR? Yeah, I see some nodding heads there. How do you work with EOR companies? So you've given the example, but how does Convera suit a company like or a EOR company?
Yeah, exactly. So with an EOR, so if you think about let's give an example, right? So a corporate client wants to test the waters, say in Nigeria, but they don't want to set up an entity, so they use an EOR. An EOR would obviously provide the contracts of employment, the legal respect of the local laws around HR. But what we do, we facilitate that payment. So the way it works is that we call it a downstream client. So the corporate client would settle funds into one of our bank accounts globally. And then from that account, we would then push it to our account in that country. And then from that local account, then it gets dispersed out to employees in that country. So that's the general model. There's two ways to look at it. Some EORs kind of want to be a little bit close to the funds, and some EORs want to be completely separate from the funds. It depends on their appetite of risk. So to give an example, they might prefer their corporate client to actually send the funds to their own bank account, an EOR bank account. Mm-hmm. And then from there, they can use our infrastructure to get that payment locally to that employee in country. So there's different ways but the key to it is having a local account, like the local leg of that payment normally always has to be from a local account within that country to be classed as a salary payment.
I see. And is that because you'd have to, from what I know of EOR anyway, is that you'd have to adhere to the regulations and the PROs of that country? Is that, or would you be operating on an international regulation basis or from the UK? How does all of that work?
Yeah, so the first point is obviously you need the correct banking license to move money within that part of the world, which we've got. But each country is different. I mean, if you think about the UAE, right? The UAE is incredibly complex. You've got the WPS, the Wage Protection Scheme. That is a particular challenge because, as you know, you have to have an entity based first of all in the UAE, and then obviously you've got to have a bank account in the UAE to be able to make those payments. But what I'm saying is every country's got its own regulations, but then you've got tax payments as well. So if you think about employees, they're going to get their salary payments, but then there's going to be a tax payment to the local authority. It could be a social security payment. It could be a pension payment. Most countries now, again, it's essential to be able to make those payments to the local authority. You have to have a local account in that country for them to accept that tax payment. And this is where Convera is kind of unique because we've got more bank accounts than any other non-bank. so we can move money from local accounts essentially. So that's why we tend to gravitate towards a lot of EORs, because we've got that solution at the moment, and the competitors are sort of on catch up, but they will get there, to be honest with you.
Yeah, I mean, it sounds quite attractive, particularly, I mean, for many of our members, the Global Chamber, they operate across multiple markets. So not just one corridor, as it were. And it does beg the question, how should globally exposed businesses build a payments and FX strategy at this point?
Mm. Yeah, exactly. I mean, it's like anything. If there's any businesses obviously looking to expand into a particular country, then the EOR model is obviously a very cost-effective way to do that, to test the water. But that, yeah, I mean, I think we've seen probably over the last sort of 18 months, the EOR businesses have definitely blown up, so to speak. There's more coming into the marketplace, and the ones that are at top of the market, the big players, they're expanding as well, because we can see it through the payment volumes coming through, but we can see them recruiting more staff as well. So it's definitely a model, I think, that's getting traction at the moment.
Fantastic. Actually, I'm gonna rein in a little bit and sort of bring it more about Convera, the practicalities, Convera specific. Now, I invite anybody who's joined us today to ask whatever question you have or comment on whichever aspect that we're discussing today. I can't see you all, but if you put your hand up, I will certainly come to you if I keep scrolling. But to rein it down a little bit more, Convera specific, how is Convera advising clients differently today versus other competitors?
Guy, do you want to take one? Because that'd be more the hedging side, wouldn't it? Risk management.
Yeah. Well, I think, when some people have quite straightforward payment needs, and they want to sending payment from one country to the other. And I think as the one thing we're seeing is, compliance is becoming a bigger part of how people manage that type of uh, payment. And what it just means is there's higher risk of payments going missing or being delayed because, if you get a hit on a name that looks like, a name of a, terrorist organization or anything like that, then you can have some quite significant size payments sort of being delayed and going missing. So it's just really important. We're seeing more and more that you need to be dealing with businesses that have got a good compliance setup and structure, and they do have a global infrastructure that just means that you're not having to send via Swift network from one country to another. You deal with an organization that can have in country operations, and it just reduces the journey of that payment. So hedging, I've talked about in term, but a lot of businesses just worried about payments getting there faster and quicker because everyone's expecting things to be done very, very, very quickly. Nikhil, I had to come back to you on the thing you said about Revolut because I don't think I've told you that we couldn't compete against Revolut, but I might have done because they're very, very good with their technical side and for sending smaller payments. But when it comes to larger payments, I would say we are competitive. But they are a big company and they invest in relationships to make sure the money gets there quickly, as we do. And I think that's what people are looking for these days because there are lots of businesses out there, making payments on behalf of customers, and compliance is becoming a big part of how that works.
I'll just add to that as well. So something that we see very often. I'm not going to mention any competitor names, right? But if you're in a business where you're moving considerable amounts of money on a regular basis, okay, cross border, two questions I would ask your supplier, and that is, first of all, what happens when things go wrong? What's the time to resolution? How does that process work? Can you speak to me? Do I deal with a chatbot? That's the first. That's the first question, right? The second question is when I send a payment and it gets to the beneficiary. Yeah, let's say I'm sending a payment today and it's going to Colombia. When it reaches Colombia, what happens if I send, 100 grand today, but when the Colombia beneficiary is it's £1,000 light? What happens then? Because what happens in the banking world is that if you're using what we call Swift, what tends to happen is there's a number of intermediary banks along the way. When they touch the money, they're quite good at sort of saying, "Oh, I need some administration fees off of that payment." So when it gets to the end, it could be a bit light. So the question I'll be asking is, what happens when that happens? What happens? Who covers that? So that's the
Yeah. I think I just learned what is behind Swift. I had no idea that this is so it involves different banks and different transactions, and they all charge their interest, of course, and then the money has to come out from somewhere.
yeah,
So who's in charge of that?
yeah, yeah. Just ask a question. But the biggest thing is ask what happens when it goes wrong. Okay, nothing's 100% in this world. The biggest frustration. So sorry. Another question is, let's say you're sending. So we do a lot in the global mobility world. So we're paying suppliers on behalf of clients. We might send a group of payments, right? So we call it a batch payment. So it could be like, say, 10 payments to 10 different beneficiaries. This is to get back on what Guy said. If there was something there that managed that flagged sort of a sanction, you need to check whether that whole batch is then pulled to one side to be investigated, or just that one payment that's been flagged is pulled to one side and investigated. Because we've heard this is quite often that we hear this, is that batch example is the whole batch will be sanctioned, so no one's getting paid until there's been an investigation. Then you're dealing with a chatbot, and then you've got 10 suppliers going, "Where's my fund? Where's my money? Where's my money?"
Yeah.
And it doesn't. Yeah. So that's another thing to definitely to think of.
Thank you, Darren. I think I've got a few hands up there. I'll go to Jenny first.
Thanks, Zainab. Darren, Guy, thank you for a really interesting presentation. The information about the FX reaction in the current geopolitical environment, I think, is fantastic. In fact, funny enough, I was listening to the presentation and thinking, "Gosh, I'm really pleased I saw this because I've got quite a few clients that are really interested." Darren, what you mentioned partly answered my question. So, as a litigation disputes lawyer, we often have that exact problem where we send money, large amounts of money, in an international dispute, for example, a settlement sum or fees, and we have the problem that you mentioned. We're going through the SWIFT system, and we get to the end, and you are, £1,000 short, and then we start the discussion about who's paying for that, claimant, defendant, and it can get quite heated. I have clients saying the law firm should be settling this, and it can get quite upsetting. And then you're right, if something goes wrong, that's exactly yeah. And then again, I've dealt with some very difficult situations, and Revolut, funnily enough, is one of the entities. I probably shouldn't have said that on a call with everybody, but they're one of the entities that we've handled before for very similar concerns, issues, situations, whatever you want to call it. My question was actually probably Darren or Guy, connected to that, which is does Convera, are you able to help navigate situations where it can be quite difficult to get money out of country? So, for example, China's the one I'm thinking of, where it's very, very difficult to get money out of China, lots of internal rules. It is very, very difficult. And is that something that your team can advise on and assist with?
So I always get this. It's CNH, isn't it, Guy? The offshore currency for China. CNY is internal, isn't it?
CNH is
Yen.
offshore, yeah.
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 Okay. So the way we help there, Jenny, is when we receive money out of China, okay, we need so when we receive money from a client, that client needs to be in a jurisdiction that we can onboard them through KYC and AML.
Right.
Unfortunately, we don't have any jurisdiction to onboard any entity based in China. However, if that organization had another, had another entity, say,
A branch office or something.
yeah, Hong Kong, Singapore, US, UK, then certainly we can help them because we've got it's an interesting one, China, because we've got offshore bank accounts that hold that currency.
Right.
So we can, yeah, but that's the only sort of caveat, you would say.
Yeah. Okay. Well, that's quite interesting. A bit of food for thought. Thank you.
Thanks, Jenny.
Thank you, Jenny. Gregor.
Yes, I've forgotten my first question, but I had a second question, so I'm going to go with that. Guy, thanks for the presentation. Nice to see you and Darren. I guess what I'm thinking about, we were speaking with a wealth management company the other week, and they were saying how things have changed quite a lot for them over the last year with a lot of the volatility that's going on in terms of geopolitical. So they've got some customers that would rarely get in contact with them during the year and are quite happy to let them do the investment for them. And now they're actually saying some people are phoning them every week. So I would tie in with what Zainab said at the start of the call, that I think as humans, as business people, we get on and we still do things. There may be a pause, but we find a way around how we meet and how we do business. But for both of you and Kavera, is there a way your jobs have changed on a daily basis? Is there a way that you've had to change your offering and how you deal with your customers? Because things are just moving so rapidly all the time in your marketplace, aren't they?
Great.
Yeah, I mean, they say in FX, volatility is something that the business thrives on because it's kind of a big problem we're there to fix. So, Gregor, as I think about that, it's not something we're not used to, everything that's happening now. I mean, it's happening at a big scale and it's kind of a human side to it, which is kind of distressing to everybody. But in terms of how you help businesses manage, you know, uh, I think what we're doing is certainly utilizing our insights team more in terms of up-to-date advice. So I'll be sending out to partners and clients daily reports in terms of everything that's happening. And that will help them decide, okay, well, am I going to buy dollars spot this month or am I going to buy them forward this month? Actually, what we would probably be suggesting if you're a larger entity is you kind of get a mix of that and you enter into a hedging product which allows you to guarantee your profit margin, but also gain some of the upside if the spot market price improves. So, as I'm thinking about answering a question as I'm talking, I think ultimately what people are starting to want to have is more nuanced advice around the different types of products rather than just that one is spot, that one is forward and guarantees the price. There's a different kind of option solution that gets you the upside. If the dollar continues to strengthen, which if the war continues, then it will. But it also protects your profit margin. But it's all about protecting profit and navigating volatility. The upside is something that is something we're dealing with more with businesses now. So at Convera, we will speak to anyone about all these products. You have to be a certain type of individual to buy a product like that, and you have to have bought it before. But you might not get that from a big bank, for example, and you might not get it from a smaller player as well. So more nuanced hedging solutions, I think, as people start to become wiser. And, with AI, I mean, everyone's got more information now. Everyone's becoming smarter through chat box. So, it's helping us if we've got those products to help.
Thanks, Guy.
Awesome.
Thanks for the question, Gregor.
Thank you so much, Gregor, for your question. And again, thank you, Guy and Darren. This time has passed so quickly. I've learned quite a bit. It was a valuable discussion. And today's session is such a strong reminder that global business leaders now have to think much more dynamically, and not only about growth and opportunities, but also about resilience, currency management, and how quickly geopolitical developments can really affect commercial decisions. And that is exactly why forums like the Global Chamber matter, because they give us the chance to stay informed, and stay connected, and can keep building practical and international relationships. So thank you again, Darren and Guy, for your time today. And thank you all for joining us today. And we look forward to continuing the conversations.
Thank you.
Thanks, Zainab. Thanks, everybody.
Nice to meet you all.
Thank you.
Bye, everyone.
Okay.
Bye.
Bye-bye.
Bye.